we bought $250 million of Bitcoin, and that was like all the money we'd come up with in 30 years.
Yeah.
And this was just a short week, 4 days.
According to Michael Saylor, Bitcoin is no longer just a fringe investment or a speculative hedge against inflation. It has become a core financial instrument, reshaping the way corporations, investors, and even governments think about storing value. He points out that every Wall Street research desk now has target prices for Bitcoin, and they're all north of $150,000 per coin. For some, the bullish case stretches as high as $200,000 by the end of the year, fueled by ETF flows, corporate adoption, and heightened investor education.
Well, most of the equity analysts that follow our stock have target prices for Bitcoin, and they're all north of 150. Bitcoin represents a digital transformation of the capital markets, and so the more people know about it, the more they get educated on it, the more companies embrace it, the higher it goes. You can't make any more of it.
Right. That may be all, but in terms of just what you're seeing in terms of flows and whatnot, that would get it to $200,000 by the end of the year.
Yeah, great flows from the ETFs. BlackRock is showing record numbers. Our companies raised $19 billion this year.
Right.
All of it went into Bitcoin. We just announced $217 million of Bitcoin purchases this morning before I walked onto this set here.
Wait, $217 million this morning?
$217 million, just slightly less than 2,000 Bitcoin. Our first buy, and we were the first public company to buy Bitcoin, we bought $250 million of Bitcoin, and that was like all the money we'd come up with in 30 years.
Yeah.
And this was just a short week, 4 days.
Okay, so can I ask you this? For those folks who are investing in MicroStrategy, or strategy, I should say, as opposed to Bitcoin, you are effectively a levered bet on Bitcoin. That's what this company has become.
That's
Fair?
correct.
Okay, so the question is, on the way up, it would be it's fabulous, right? Because everything becomes, multiplied. What happens on the way down, if there is a down?
Well, a lot of investors, they have to buy equity, and so we offer Bitcoin-backed equity, or they need to buy credit, and so we have 4 Bitcoin-backed credit instruments, preferred stocks. So the ones that are risk-averse, that want the exposure, are buying the credit, like Strike, which has got the upside with some downside protection. The ones that are buying the equity want 2x Bitcoin. They want more volatility, they want more performance, and they see it as a more efficient way to get that exposure. Turns out that 99% of the money in the world is mandated to equity and credit. Most of these professional investors and most of these passive funds, they can't buy the underlying commodity even if they wanted to.
Right, but just to understand it, if in fact, even if there was a crypto winter, and we'll call it a winter because that suggests there's still a potential summer again, at what numbers and levels does it become complicated at which you start to have to sell things?
You know, we constructed a pretty bulletproof balance sheet. I would say we have a PhD in leverage by now because we lived through the last crypto winter. We went from 6,000 to 16,000. We were buying Bitcoin at 16,000. We used to use senior debt, and we had some margin type loans. We rolled out of that to converts, and this year we really have started to reallocate to preferreds. And preferreds are the best kind of leverage because they never come due. So I think we're fine right now because substantially our leverage comes from preferred stocks rather than from debt at all.
Bitcoin isn't just an asset. It's the first true digital transformation of capital markets. For decades, companies have used cash, debt, and equity as the foundation of finance. Now, Bitcoin is emerging as a new foundational layer, a digital, incorruptible, and scarce monetary network. Every quarter, more believers are being made, whether they are banks, politicians, credit rating agencies, or investors. And every quarter, the infrastructure around Bitcoin gets stronger, deeper, and more resilient.
I don't think there's a bias. I don't think we expected to be selected on our first quarter of eligibility. We figure it'll happen at some time. There's a digital transformation in the markets. This is a brand new, novel concept. Every quarter, we make new believers. We get more support from banks, from politicians, from credit rating agencies, et cetera. I think that will continue for the foreseeable future.
Can we just go back to the preferred piece for just a moment? Just because I think people want to understand, what a leveraged bet this is. But you're suggesting that because it's preferred, it never comes due. How can it be that they never comes due?
If you were using margin debt, you'd never want to go beyond 10% leverage. If you were using bonds, maybe 20, 25% is about the most you would want to do. But if you're selling a perpetual instrument, I borrow $1 billion forever, and I agree to pay you, say, 10% dividend yield forever. The principal's never coming due, right? And the preferred stock, by definition, is a dividend. It's not a coupon. The board has to have the option to suspend it in duress. So it's practically speaking possible to take your leverage beyond 20% to 30 or 40% even, but you don't have the kind of credit risk you have when you have a bond or a margin.
Let me ask you a different question. There's a whole bunch of companies now, these sort of Treasury companies that are emerging, SPACs and other things, that are trying to look a little bit like what you're doing, right?
We've had 180 companies that have adopted Bitcoin on their balance sheet. We were the first. So there's an explosion in the past 6 months.
Right, but I'm curious about some of these levered efforts that may be using actual debt, not preferred the way you are, and how you think about them in the marketplace.
Most companies are buying Bitcoin instead of holding sovereign debt, or they're buying Bitcoin instead of dividending out their cash flows, or instead of buying back their stock, they're just buying Bitcoin. And so they're actually increasing their capital base. They're decreasing the credit risk in the company. There are a few companies that are going to issue Bitcoin-backed credit. They may do it with bonds. They may do it with converts. They may do it with preferreds. We're the first company to create liquid preferred stocks that represent Bitcoin-backed credit. Companies like Metaplanet will probably issue preferred stocks. They'll do it in Japan, in a yen basis. Most other companies are just going to creep into this by building up their capital base, and they're not going to get into the business of issuing credit instruments backed by Bitcoin.
How much leverage do you have?
We have about, 11% of our Bitcoin holdings are bonds, so convertible bonds, and like another 9% are preferreds. Okay. So not that much. I mean, really, we have $72 billion of Bitcoin. We have $8 billion of convertible bonds that will eventually equitize. More than half of them are already in the money.
As Bitcoin adoption spreads across corporations, ETFs, and sovereign strategies, the question isn't whether Bitcoin will integrate into global finance, it's how fast. So, whether Bitcoin hits $150,000, $200,000, or higher in the near future, the real story is this. We are witnessing the birth of a new monetary standard, one company balance sheet and one ETF flow at a time.